let's get started today. So we're still, it's our second part of chapter 2. We're going to talk today in a little bit more detail about minimum wage and about overtime. Remember, those are two of the main provisions of the FLSA. So we will hopefully start to get into some calculations today. We're going to be very heavy on calculations those last two sessions in chapter 2. So Thursday and then next Tuesday as well. Much of your homework is centered around calculations, and so you guys probably, if you've already started to dive into it, you may have some questions that are already starting to pop up. So make sure that you bring those to class on Thursday and Tuesday. So if you have any specific questions, we can maybe do them along with our lectures and kind of get you sorted out there. Any questions before we get started today? Okay, right on. Okay, so we're going to go back to our PowerPoint slides here for the chapter. I'm actually going to download them because that's going to make life a little bit easier rather than toggling back and forth too much. I have another PowerPoint slide that we're also going to use that is included in here that you can access, and this is actually a PowerPoint slide that is put together by the Department of Labor that goes into a little bit more detail, presents things a little bit differently than our chapter does. Obviously, same material, same information, just presented a little bit differently. So I'm going to get that one going too. So we already talked about, just to kind of recap a little bit, we talked about who is covered by the FLSA. Remember, we have that enterprise coverage and we have individual coverage. So if a person working within an organization, if the organization itself is not covered by the FLSA, doesn't meet that $500,000 annual gross sales threshold, then they still may be covered as individuals within the organization if they are engaged in interstate commerce. And we also talked about how it's really hard these days not to be engaged in interstate commerce. For all intents and purposes, pretty much everybody would be. Also, there are certain organizations, hospitals, schools, governmental type organizations that are those employees are automatically covered by the FLSA. We also talked a lot about how we define what an employee is, and we talked about that economic reality test, that centers really a lot on control, both behavioral control and financial control. I'm not going to go over that in any more detail. We really talked about that thoroughly last week. So just keeping in mind that the FLSA and all of the laws that we cover now in this class pertain only to employees, not to individuals who would be defined as contractors, but that there's not one hard and fast rule to determine whether somebody is a contractor versus an employee, right? We've got to take all of the circumstances into consideration when making that determination, but employers can get themselves into a lot of trouble if they intentionally misclassify individuals as contractors when they should have been classified as employees. Not so much trouble the other way around. If you're classifying somebody as an employee who is probably really a contractor, the IRS, Department of Labor, isn't really too concerned about that, because essentially what that means is you're providing them with more protections than what they're actually entitled to, and the government doesn't really care if you're doing that. Good for you. But they do get a little bit testy when employers don't provide the protections that employees are entitled to. Okay. Let's see. One thing we really didn't talk too much about, so this concept of domestic labor insofar as like somebody who is a nanny or a housekeeper or if you're lucky enough, a chauffeur, a butler, that sort of thing. We think of these positions as really kind of being geared toward providing services to a certain higher socioeconomic class, but there are a lot of people that can fall into this category just by accident. Like if you have a child and you hire somebody over the summer to take care of that child and end up like a nanny and end up paying them $3,000 in the summer, you may be considered their employer, which a lot of people don't quite realize that a lot of folks can get themselves into trouble by not treating those individuals as employees if they are supposed to treat them as such. So there are some guidelines for those. So employees, and this means that these domestic employees have to be they're covered by the FLSA. So you got to pay them minimum wage. You got to pay them overtime for any hours over 40 during the week. So if they work, so the employees must earn minimum wage if they work 8 hours per work week or more in one or more homes, or they earn at least $2,400 from one employer during a calendar year. So this is where you could get that summer nanny position that could kind of fall under that umbrella pretty easily if you're hiring somebody to take care of your kids in the summer and you're paying them more than that amount. There are some exceptions to it. So live-in domestics, and none of you are probably old enough to have watched the Brady Bunch. That's something I used to watch do you even know what the Brady Bunch is? It was a TV show back in the 60s. I think it originally came out in the 60s. When I would come home from school, I would watch reruns of the Brady Bunch. I'm not old enough to have watched the original Brady Bunch, but they had a housekeeper named Alice at the Brady Bunch, and she in this household, and she provided all of these services, and she lived in the house. So Alice was a live-in domestic, and she would not then be entitled to overtime. So there are some certain specifics, exceptions for these categories of workers as well. Yeah.
The one you've got up there says 2,400. The one that we've got on the module says 2,600. Which one is it?
Really? I thought I was looking at the same one as, oh, you know what? That's a good point. Let me open up the one that you have, because I think this agenda was just carried over from last semester. So hold on, thank you for pointing that out. I will update that. So now it's 600. So that brings up a good point that does get changed for inflation every year. It can get increased. So let me go ahead and find that. There's another area where something I want to mention to you guys, that you're going to have an issue with one of your homework problems that I noticed today. Let me download this. Now I don't know if that's the old one or the new one. I think that's the old one. Yep. This one's green, that one was red. Thank you very much, Anthony, for pointing that out. So that threshold is $2,600 rather than the $2,400, which is what it was in the previous year. Let's see. Direct care workers, as they point out here, so a lot of times individuals they'll be employees, especially in this industry, when they're providing assistance to the elderly disabled. Maybe they work for a service, but then they are sent out on assignment into individuals' homes to care for them. So I think one of the companies, Biata, is one where they hire nurses and then they send nurses out to help individuals. Well, those nurses are employees of that greater company, not of the individual that they are providing the service for. Okay, so in that case, they're still subject to minimum wage and overtime rules, because they are employed by a third-party employer. Even though the service they're providing directly is to an individual, their employer is that company. All right, minimum wage. Let's talk a little bit about minimum wage here. And I mean, we know that it's $7.25 an hour, but what does that include? It's kind of surprising, actually, that we can include different types of income in that $7.25 hourly rate. So we can include any commissions that are earned by the employee. So that means that if they've earned 2% commissions on $1,000 in sales during the week, that, what is that, $20? That $20 then gets included in the overall total that they are paid in the calculation of overtime. So essentially what that means is the employer gets to pay them less than the $7.25 an hour because they get to make up the $20, that additional $20 gets to be included in their overall pay for the week for minimum wage purposes. Earned bonuses, these are otherwise known as non-discretionary bonuses. So these are bonuses where the person, they know what they have to do in order to earn the bonus. So if you go a week without having any accidents, you're going to get a $50 safety bonus. Well, you know it's predefined what that bonus is going to be for you. You know how to attain it, as opposed to discretionary bonuses, which are just the end of the year. Hey, you've done a great job. We met our sales goals. Here's an extra $300, right? But those earned bonuses can also be included in the calculation of overtime. Severance pay as well can be included if an individual receives severance pay. On-call pay gets to be included in that calculation, and then also shift or weekend differential type of pay. And as they already defined what the discretionary bonus is here. So other types of compensation, though, that are not included in the regular rate of pay. So these would be over and above minimum wage. Any gift that is made as a reward for service. So we're not talking about bonuses here, we're talking about other types of gifts. Profit sharing plans, payments when no work was performed. So vacation, holiday, sick day, or jury duty pay does not get included in that calculation of minimum wage. If there's a guaranteed minimum number of hours of paid that are more than the actual hours worked, that is also not included. Any allowances for uniforms, tools, vehicle allowances, that sort of thing. Longevity bonuses, what is this? Parking benefits, gym access, that sort of thing. So, and those would be on-site benefits. Those are not included in when in calculating minimum wage. They are then over and above that $7.25 per hour. Now, as I had mentioned before, there are certain exceptions to that $7.25 an hour. Even at the federal level, there are certain exceptions. So there is a training wage of $4.25 an hour. This is for the first 90 days of employment for a newly hired employee if they are under 20 years of age. So, but it's only during those first 3 months of employment. Higher education institutes, retail or service establishments, and farms can employ full-time students at 85% of the minimum wage, whatever that minimum wage rate happens to be. And there are certain other exceptions too. I'm not going to go through all of them. They're in your book. You can read that. And then there are also certain situations where that $7.25 has to be more. Has to be more than $7.25 an hour. So employees of federal contractors have a separate minimum wage. So if a company contracts with the federal government, their employees have to be paid a higher rate of pay. So, and that would include service workers as well. We usually think of government contractors as like the Raytheons and those who provide defense contractors, those who provide those kinds of services. But there are a lot of contractors as well that provide other more basic types of services, like the employees that provide, like there are cafeterias and stuff on federal premises. So individuals who are employed in those, if they are, it could be that they are contractors, they're not actual employees of the federal government, but they're part of a company that provides those services within that. They still are they're gonna have to pay a higher minimum wage because they're a federal contractor. And then also we talked about states. Most states now have a minimum wage that is set higher than $7.25 per hour. And certain localities as well may have higher minimum wage. Whatever it is whichever one is most generous is what applies, right? Most generous to the employee is the rule that would apply. There are some states that have no minimum wage laws on their books. Just there's no minimum wage, which means that if at some point the federal government decides to do away with the minimum wage, or says that the minimum wage is whatever the state wage is, those states will have no minimum wage. Now, so Alabama, Louisiana, Mississippi, South Carolina, and Tennessee are all states that do not have a minimum wage on their books. Now, they still have, those employees within that state still have to be paid at the federal minimum wage. They can't be paid less than that. But like I said, there's nothing at the state level then that is enforceable. And as I mentioned here, so there are states that have different jurisdictions have different laws as well. Your book talks about this concept of a living wage. Living wage isn't a legal concept. It's, usually living wage is determined by what the cost of living is in the jurisdiction. There are movements to match the minimum wage to whatever the living wage is as it's calculated, depending upon who's calculating it, right, and what factors you put into it. It's a pretty politically charged type of concept, but there are some localities that have living wage. They've made them into laws on their books so that it has to be at least a minimum amount that what they deem an individual needs in order to live and to pay their bills. Iowa does not include any jurisdictions, of course, that have minimum wage, or I'm sorry, living wage on their books. All right. One of the exceptions, and this is a big exception to the minimum wage, is for tipped employees. So, tipped employees, the minimum wage that an employer has to pay a tipped employee is $2.13 an hour. So first off, what is a tipped employee? Tipped employee would be someone who customarily and regularly receives more than $30 a month in tips. This is the one that I want you to pay attention to. One of your homework problems has the old number in, and they say $20 an hour, or $20 a month, sorry. So when you're going through and answering those, and maybe not everybody may have that same question, the questions vary per student, but just keep in mind that I would suggest you put in the correct answer first, but if it shows that it's not correct when you do the check your work, try 20, okay? Because it's an error that I was working with a student this morning on it, and we discovered that was a problem in that homework problem. So anyway, the current law though is if an individual receives on average more than $30 per month, and they are considered to be a tipped employee, they have to be paid a minimum of $2.13 an hour, which of course is a lot less than $7.25 an hour. Why do they have to be paid less than that? The assumption is that the tips that they're receiving are going to make up for the difference and will get them up to the $7.25 per hour. Okay? That difference between the regular minimum wage of $7.25 and then the minimum wage, tipped minimum wage of $2.13 is what we call the tip credit. I will tell you, a lot of students struggle with this. This is an area that in your homework problems and stuff, there are a lot of struggles with this. So we are going to go through some more calculations when we get to those calculations. I just want to give you the general concept at this point. So the difference between those two is $5.12, and this is on an hourly basis. So the assumption is that that employee is going to make up that $5.12 per hour in tips. Okay, now sometimes that doesn't always happen. I mean, if you're somebody who is making $30 a month in tips, you're obviously not going to make up, and you're working 40 hours a week, you are obviously not going to make up this $5.12 an hour. So if the employee has not earned enough tips to get to that $5.12 an hour, the employer has to make up the difference. So this employee is always going to be making at least $7.25 an hour for their regular pay. Okay? It's just that the employer essentially gets a break on that tip credit amount. So when you go into a restaurant and you are leaving a tip, essentially what you're doing is subsidizing the wages of that employee, right? You're helping to pay their minimum amount of wages. Obviously, we've got different amounts for different states as well. In Iowa, remember I said that the minimum wage for tipped employees is $4. You know what? I didn't know if it was $4.25 or $4.35. So let's look it up real quick. So Iowa tipped minimum wage, $4.35 an hour. So that means that tip credit in Iowa is going to be different. Because we still have to arrive at the $7.25 an hour. Okay. So the employee, so let's just assume that an individual works 40 hours a week. They're a tipped employee, and they make, 40 hours. And so the employer's got to pay them $2.13 an hour at a minimum. Even if they made $7,000 in tips, the employer still has to pay them $2.13 an hour. That's the minimum that they have to do. Let's say they made, they're $2.13, and then they had tips of, what's a good amount? $150 during the week. So we've got the 150 here, and 213 times 40 is, I think it's 85. What is it? I used to know this off the top of my head. Oops, that's not what I want. Calculator. $85.20. So in total, this employee made $235.20 for the week. Now they worked 40 hours a week during the week. Now we have to determine whether or not they made that $7.25 an hour, because they have to have made at least that amount on an hourly basis. So if we take the $235.20, right, and we divide that by 40 hours, what do we get? We get $5.88 an hour. Not enough, right? The employer is going to have to make up the difference by paying them, getting them up to that $7.25 per hour in this instance, okay? So you just take the difference between what they actually made and the $7.25 and then multiply that by the number of hours that they worked, okay? And that's the additional amount then that the employer is going to have to pay them. Now, if they instead had tips of, let's just say they had tips of $250. So they made a total of $335.20. If you take the $335.20 divided by 40, $8.38 an hour, they're good. They're golden. The employer doesn't have to pay them any more than that $85.20 an hour in that circumstance. Okay? Some numbers to remember, just kind of off the top of your head, that will make your life a little bit easier. One of those numbers is $290. That is $725 times 40. So the magic number to get to for a tipped employee with the hourly rate combined with the tips that they made is $290. If they made more than the $290, employer doesn't have to pay them any additional. If they made less than the $290, then the employer is going to have to make up the difference to get them up to that $290. The other magic number is the one that I forgot, $85.20. So that's $213 times 40 hours. Now, tipped employees also will work overtime, and that adds an additional little wrinkle that we are gonna talk about. Okay, when we talk about, we're gonna talk about it now. Well, I guess we're gonna dip our toes into it now. Any questions before I move on? No? All right. So tipped employees are still entitled to overtime pay if they work over 40 hours a week. That tip credit, though, doesn't change. It stays at $5.12 per hour. So that means that the employer is going to, if the tipped employee works overtime and doesn't make enough, if they worked in overtime, the employer is going to have to make up even more of that tip credit. So here's an example here. Oh, well, okay. So federal contractors, the minimum wage was $13.75 per hour. Tipped employees for federal contractors have to earn at least $16.20 per hour combined tips and wages. So just kind of an FYI. Let's look at Raquel as an example here. So Raquel works 47 hours at Christchurch Bar. She's a tipped employee, so she worked 7 hours of overtime at that bar. She averages $750 in tips per week. If her employer takes the maximum tip credit, which is $5.12 per hour, this is how we're going to calculate the gross pay that the employer has to pay on top of the $750 of tips per week. So the employer is going to have to pay that $85.20 for the 40 hours. And then they're going to have to pay 7 hours of overtime, which is calculated by taking, so the overtime rate, $7.25 an hour times 1.5 is $10.88. This is our overtime rate, our minimum wage overtime rate, $10.88. So for the overtime, we have to have, get this out of here. She has to have made at least $10.88 per hour minus the tip credit of $5.12, which she obviously, at $750, she made that up. Which means the overtime rate that the employer has to pay is $5.76 per hour. That's the $10.88 minus the $5.12. So for the employer, what they have to pay is the 40 hours at $2.13 an hour plus 7 hours at $5.76 per hour. She's going to get that $125.52 in addition to the $750 of tips that she's already been paid, that she took home. Don't worry, I know I see a lot of your faces, or like I see fear on some of your faces. We'll go through more of these problems. This is just kind of an overview at this point, okay? An introduction there. Just know that that tip credit, that $5.12 per hour, does not change. Okay, it does not change if it's in overtime or regular hours. They're still just allowed that $5.12 per hour tip credit. Here's a couple of other examples. So we've got, and this is for a 40-hour work week, tips of $43 for the week $43 for the week, $85.20, that's our regular rate, 213 times 40 hours. So if we add those two together, $85.20 and 43, we're obviously well under the $290 goal that we're looking at, right? For a 40-hour week. Now, if they worked 30 hours, it wouldn't be $290, right? It would be a different amount. But for our purposes here, that amount is not enough, which means the employer in this case must pay additional wages of $247. Additional, which includes, by the way, it's a little confusing, additional in this case includes that $85.20 that they're already obligated to pay. Okay? Now in this case, reported tips were $1,189. Well, obviously that is way more than $290 on its own. So the employer's not going to have to pay any more. But they still do have to pay $85.20 to the employee, even though they made that amount of tips for the week. Okay? Let's see. So what's included in tips? So service charges cannot count toward the tip credit because they are considered wages subject to regular withholdings. So that doesn't include, that's not included in the calculation of tips. So if this person here, yeah, they made $1,189 of tips, if 1,000 of that was due to service charges, the employer's probably going to have to pay additional because it's only $189 that they would then get to count as tips. Okay. If 75% or more of the employees agree, the employer and the IRS can determine a tip rate for various different types of occupations. So I've never seen that, but it would have to be very specific types of occupations. Okay, so what happens when we've got two jobs that are performed by one worker? The tip credit can only be applied to the job that qualifies as tipped employment. So if you work for a restaurant and you're a server for part of the time and then you're working in the kitchen for part of the time. Well, the kitchen work isn't traditionally a tipped profession, and so that tip credit only counts toward the hours that you actually worked as a server. Does that make sense? Okay. All right, let's go. I want to pause for just a second here and go to our other slides because I think there's some other our DOL slides. Okay, so we've already kind of talked a lot about who is covered by minimum wage. This concept, this wording here, non-exempt employees, we're going to talk about that in a few minutes here. We're going to talk, there is a distinction between employees who are exempt and employees who are non-exempt. And what that's referring to is individuals who, even though their enterprise is covered, or individually they are covered by the FLSA, because of their job classification, they may be exempt from the overtime and minimum wage provisions of the FLSA. Okay, but and that would be on an individual basis. There are still requirements for them though. There's still separate payment requirements for them. So that's what they mean by non-exempt. Again, we'll go into more detail of that. They have to be paid at least the federal minimum wage, cash or equivalent, for all hours worked. What's included? Wages, commissions, certain bonuses, tips, again. Also, something we haven't mentioned yet, reasonable cost of room and board can also be included in this if it's provided by the employer for the employee's benefit. This is an important distinction, if it's for the employee's benefit. So the employee is the one that's making the choice, and the employer is not requiring them to take this benefit. The value of that benefit can be included in the calculation of minimum wage. So think if you work at a hotel and the employer has available one of the rooms that you can use if you want, but it's your choice. They don't say you have to live on the premises. In that case, the value of that hotel room that you're using can be included in your wage, the amount of your wage. Now, if the employer says the hotel, let's say it's on Mackinac Island, and you can't really, it's really difficult to get back and forth, and they require you to live there so that you could be on the premises at all times. In that case, because the employer is requiring it, the value of that is not included in the calculation of minimum wage. Okay, so that distinction is important, and it's not just lodging, it would be also food and other types of benefits. So in order for it to count toward wages, 5 requirements have to be met. It is regularly provided by the employer or similar employers, so it's customary in that industry. Employee voluntarily accepts it. The lodging is furnished in compliance with applicable federal, state, or local law, so it's got to still meet all of the regulations. It is provided for the benefit of the employee rather than the employer. And again, this is for it to be included in the calculation of minimum wage. That means that if the value of that on a weekly basis is $200, now the $290, it's only $90 that they have to meet, because the other $200 was in the value of your lodging. The employer maintains accurate records of the costs incurred in furnishing the lodging as well. Remember, if the employer requires it though, it's not included in the calculation of what the wage is. What about deductions? So things like, well, there's some examples here of some illegal deductions. For tools that are then being used by the employee. Remember, they're an employee, they're not supposed to provide their own tools. If a tool gets damaged, it's the employer's responsibility to replace that tool. But if they are charging the employee for that, then that then comes out of the calculation of minimum wage. The employer essentially has to make up for it in the wage. Damages to property, cash register shortages as well, believe it or not. You cannot, if an employee is caught with their hand in the till and they've stolen money, the employer can't take that money out of their paycheck. They can press charges, and probably should, but they can't turn around and take that money out of the employee's paycheck. Deductions from pay are illegal if the items are primarily for the benefit or the convenience of the employer, and the deduction reduces employee earnings below the required minimum wage. So here's an example of that. We've got an hourly rate, $8 an hour, weekly hours of 30, so $240 for the total wage for 30 hours. The employer required a uniform and charged the employee $30 for it. That brought the worker down to $210 during the week. Well, minimum wage for 30 hours would be $217.50. The employer has to make up the difference to make sure that they get up to the $217.50. Okay, because it took it below the required minimum wage amount. Okay, so we already talked about tipped employees here, and we talked about that tipped credit. Let's see if there's anything new here. Okay, hours worked. How do we count, what hours do we count for hours worked? What is considered to be work time, right? Because an employee has to be paid for all of the time that is considered to be hours worked under the FLSA. So this may include time that is spent waiting. So let's just say you're a bookkeeper and your employer's computer system is down. So you're just waiting. There's nothing really that you can do. All of your work is on QuickBooks, but the employer says you cannot leave. You've got to stay there until the computer comes back up. They have to pay you for that time, right? They have to pay you. If they let you leave, then they don't have to pay you for it. But if they're saying you've got to stay on the premises, then they do have to pay you for it. On-call time as well has to be paid. It could be paid at a different rate No. Training time, so the time that you spend in training, again, that could be paid at a different, depending upon how old you are, could be paid at a different rate. If it's required by the employer though, you have to be paid for that time. Time traveling while on the job has to be paid also, as well as sleep time in certain circumstances. Now, if you're just falling asleep at your desk, then that's a little bit of a different situation. But we're talking about those types of positions where you are there for extended periods of time. So, in general, so for hours worked, an employee is unable to use that waiting time for their own purposes. Like I said, where the employer says you can go ahead and go home, we'll call you when the computer is back up, then the employer is giving you that time. You can use that time for your own purposes. In that case, that would not be considered hours worked. Waiting time is controlled by the employer. So again, the employer is saying you've got to stay here. They're controlling whether or not you can leave. Hours not worked would be when the employee is completely relieved from duty. Break time long enough for the employee to use for their own purposes as well. And that break time is kind of a state by state issue also. And I really don't even know in Iowa what the requirements are in break time, but something like 20 minutes would not be considered time that you could actually use for your own purposes. On-call time, so this is where you're in a profession where you could be, I go back to the medical profession. If you have do they even use beepers anymore? Probably not, just cell phones. But if they call you in, you have to go. So you have to be available at any time to go in. It is considered hours worked if the employee must stay on the employer premises or must be so close that time cannot be used effectively for their own purposes. Hours not worked, this is if the employee must provide their contact information, but they can use their time effectively for their own purposes. Now, a lot of employers do pay for on-call time just because of the economics of it and to get people to participate in it, but they're not required to do that. All right, so rest and meal breaks. So the federal, 20 minutes or less is considered not enough time to be able to go and do something on your own, it said. Bona fide meal periods, 30 minutes or more, do not need to be paid as hours worked. Employer does not have to pay you for a lunch break. The worker, though, has to be completely relieved of duty for the meal period not to be paid. So if you're a receptionist and you don't have anybody to cover for the desk during your lunchtime, so you have your lunch, but you're still sitting there answering the phone, that is time that has to be paid. That's not considered a break time. That would be, they wouldn't have to pay you for, okay? Because you're still doing work. Training time. Time spent in meetings, lectures, or training is considered hours worked and must be paid unless the attendance, all of these have to be met, by the way, all of these factors. So attendance is outside of regular work hours, and it's voluntary, so you don't have to go. The course, lecture, or meeting is not job related, and the employee does not perform any productive work during that time. So otherwise, if they don't meet those criteria, that training time has to be paid. Travel time. So travel from home to work is just considered commuting, and it is not work time. Doesn't matter if it takes you 3 minutes to get to work or 3 hours to get to work. It is not considered work time. Travel between job sites during the normal work day is work time. So if I'll go back to you're a bookkeeper and you have to go out and travel to different clients' offices to update their systems or to get some information, that travel time is compensable. Your employer has to pay you for that time while you're traveling to that client's office. There are some, and we're not going to go into details, special rules for travel away from the home community. So we're talking like you go to a conference. we're talking about the travel time, like the time that you're at the conference. If it's for your employer, that would be considered work time, but the actual travel time may or may not. So sleep time, shifts of less than 24 hours. If the employee is on duty for less than 24 hours, they are considered to be working, even if they are allowed to sleep. Engage in personal pursuits. No sleep time deduction is permitted if it's less than 24 hours. 24 hours or more, they can agree to sleep periods up to 8 hours that would not be considered work time, but only if certain conditions are met. Okay. Let's see. So, and this is kind of saying the same thing. So the employer and the employee, if they agree, can exclude from hours worked up to 8 hours spent sleeping if the employer has to furnish adequate sleeping facilities. The employee can usually enjoy 5 consecutive hours of uninterrupted sleep. I'm not sure I enjoy that at home when I'm not working. And the employer and the employee have an agreement to exclude the sleep time. All right, so this is just kind of a summary there. Some common violations that they talk about, requiring minimum wage in cash. What is this? Required minimum wage in cash and or allowable equivalent. I'm not quite sure what they mean by that. Illegal deductions, as we talked about. Tipped employees, so tips that are then not retained by the employees, or the cash wage is not paid. Work suffered or permitted, not recorded or not paid. That's actually pretty common. There are a lot of cases of employers, big name employers even, forcing employees to clock out, but then requiring them to keep working. Right? There have been many cases of that happening. It's not terribly unusual, and like I said, not just mom and pop places, but big name employers. What's that?
My girlfriend's younger sibling just turned old enough to get a job. She chose the first job at the place of Arby's, and quite often her boss told her to clock off and stay at work. And no,
That is a federal violation.
Her sister just left. I mean,
Yeah.
like, no.
Yeah.
The only thing I ever did off the clock was arm the alarm as I was walking out the door.
Yeah. Yes. Yeah. So, and that's a great example. I mean, in my mind, I know it's a lot of fast food places. I think Walmart has gotten into trouble for that as well in the past. So those are big time violations. Having employees work when they're already clocked out. They can clock back in and work, but all right. So that's what I wanted to say essentially about minimum wage. I'm gonna move back over here. Where are we? Start talking about overtime. Which is the right one?
I think it's just the next slide.
Yes. I just want to make sure I've got the right. I think I closed that other one, but. Let's see. Where is it? Tipped employees, sorry. 30, okay, so this is the right one. I should just close that other one. So I'm not getting confused. All right. Get this up. Okay, so overtime. So we got the goods down on minimum wage, at least the basics there. You're gonna get a lot more practice with your homework, and we'll do more practice on that stuff as well in class. So let's talk a little bit about overtime. So the work week, and we kind of got an overview of this in the video from last week as well, that video that we watched, that DOL one, about overtime. Remember, it has to be, we have to establish a work week. And it can be established by the employer. You know, it doesn't have to be Sunday to Saturday. Sunday at, 12 o'clock to Saturday at 12 or 11:59. It can start Wednesday and end the following Tuesday. That's fine. It has to be consistent, right? And it has to include 7 consecutive days, totaling 168 hours. So they've got the example here, 12, actually that's not correct, that should be 12 a.m., not 12. They're missing a minute in their 168 hours. Again, if a state's overtime rule is more generous, then it follows state law. Some employers, I think Anthony, you gave an example of, you had an employer that was more generous.
Yeah, the post office figured it by day. Anything
Mhm.
over 8 hours was time and a half. Anything over 10 hours was double pay.
Mhm.
Anything over 40 hours in a week was time and a half. Anything over 60 hours in a week was double time.
Right, right. So it can be more generous, either by state or local law or by individual employer. That's fine. It just can't be less generous. Overtime is paid at 1.5 times the regular pay rate. Pretty easy calculation to do. You're just going to take, whatever the regular rate is. Let's do something more complex than $10 an hour. Let's say $15.88 an hour. Overtime is going to be $15.88 times 1.5. So whatever that calculates out to be. $23.82, which essentially means that if the individual is subject to the provisions of the overtime rules of the FLSA, and they work over 40 hours, so this is up to 40 hours, and this is over 40 hours, during that consecutive work week, then they're going to get any of the hours over 40 during that work week, they're going to get paid $23.82 an hour. So if we've got an employee, let's say the work week is our standard Sunday to Saturday work week, and they worked, let's see, Monday they worked 8 hours, Tuesday they worked 7 hours, Wednesday they worked 10.5 hours, Thursday they worked 7 hours, and Friday they worked 9 hours. What we're going to do is we're going to total all that up, which gets us to, what is that? I'll just use the calculator. So 8 plus 7 plus 5 plus 7 plus 9, 41.5 hours. That means the first 40 hours, $15.88 an hour. And then the next 1.5 hours, $23.82 an hour. $635.20. Oops. Get that right, $35.73. And then we add those two together. Their total pay for the week is $670.93. Now, it does get more complicated than this. Because sometimes we have employees who are paid on a salary basis, even though they're entitled to overtime. So we have to figure out what their hourly rate is for the purposes of calculating. We have to figure out how to calculate this if they're earning a salary. And sometimes it can get kind of complicated. Let's just kind of a simplified example there. So if the hourly rate employee works in pay periods of 2 weeks or longer, employer can elect to give the employee 1.5 hours off for each overtime hour, but it has to be in the same pay period. Okay? And they have to work for at least 2 weeks. Whoops, I went backwards. Where'd I go? Sorry. 4, 3, that's still tipped, sorry. Okay, we're on slide 17 here. So the employer can require an employee to work overtime. They just have to pay them for it. But if the employee refuses to work overtime, they can get fired for that. There's no maximum amount of hours that you are required to work during the week. You can work 168 hours during the week. You're going to be tired, but remember there's some sleep time that you may be obligated to receive, but the employer can require it, okay? But they have to pay for it. Now, one of the exceptions, and I had mentioned this last week, that one of the exceptions to the 7-day work week is for hospital employees. Because they work shifts and they've got these funny schedules, there are some different rules. The overtime is calculated on 80 plus hours in 14 days, or over 8 hours in any workday, whichever is the most generous. That's for hospital employees, only for hospital employees. Let's see. For retail service industry employees, if their regular weekly pay rate, including commissions, is $10.88 or more, then it could be an exception to the overtime provision. That's just for the retail and service industries. Also, if the employee is receiving remedial education, there are certain exceptions as well. All right, so we had mentioned that there really isn't any comp time, except if it's within the same pay period, then you can do that. But there are a couple of exceptions to that as well. I don't know if you guys you'll learn this, especially if you take more tax classes, that there are exceptions to everything. Okay, so there's a rule, and then there's an exception, and there's probably another exception, and then an exception to that exception. Comp time, though, the only individuals who do have to be given comp time are individuals who work for state or political, or it's political subdivision, so states, cities, counties, that sort of thing, or interstate governmental agencies can get comp time. There are certain limits though. If that employee is in public safety, so think police, firefighters, emergency workers, that sort of thing, or seasonal activities, they can accumulate up to 320 hours, regular hours of comp time. That would equal 480. So this is something that they can use, but only these particular professions. If the employee of a state political subdivision, again, there's only individuals who work for those organizations, if they are not in public safety, emergency response, or seasonal activities, then their limit is 240 hours of total of comp time. Those are the only exceptions to that. And the FLSA provides for payment of cash for unused comp time when the employee leaves the organization, only in these circumstances. There is no requirement that an employer pay you for like vacation time that's been accumulated. I mean, a lot of employers do, but, and again, it would depend on state law, or sick leave, or anything like that. But for comp time, if they're in work for a local jurisdiction or a state, then they are entitled to some comp time. Let's see here. All right, I want to come back to that real quick. And then I want to go to this on the overtime. jump to? Oh, shoot. It's red. All right. So again, there's that word again, non-exempt. We're going to get to that in the last part of the class today. So covered non-exempt employees have to receive 1.5 times regular rate of pay for all hours worked over 40 in a work week, which we did the calculation here. All time that is hours worked must be counted when determining overtime hours. Again, we use the work week, which is a consecutive 168 hours during the week, and it has to be consistent from week to week. So we take our, so to determine our overtime rate, now a lot of people have just a standard hourly rate, and that makes it pretty easy. Like in our example here, we multiply that by 1.5, but sometimes we don't have that standard hourly rate. What we have to do is take our total earnings in the work week and divide it by the total number of hours worked in the work week to determine what our regular rate is. So we've got to get that regular rate before we can determine what our overtime rate is. Once we've got that regular rate, then we can calculate the overtime, multiply that by 1.5. And remember, those earnings can include commissions, bonuses, cost of room board and other facilities provided for the employee's benefit. All of that's included in the calculation of our regular rate, which means it's going to be included in our calculation of overtime as well. Some exclusions, so these are very similar to the exclusions from those other exclusions we talked about. So gifts, coffee, snacks, t-shirts, raffle prizes, longevity bonuses, certain sign-on bonuses are excluded from the regular rate. So when we're doing our calculation of the regular rate, we wouldn't include those in there. Those discretionary bonuses as well, those that so the discretionary bonuses as opposed to the non-discretionary bonuses. So discretionary bonuses where it's at the discretion of the employer. So severance bonuses, referral bonuses for employees not primarily engaged in recruiting activities, bonuses for overcoming challenging or stressful situations. We don't include that in the calculation of the regular rate. Payments for time not worked. So any time that's not worked that time, but it's paid, it's not included in the calculation of the regular rate. Also, reimbursements for business expenses. So if you got paid mileage, you're that bookkeeper that drives to clients' offices, you also get reimbursed for your mileage or gas. That is not included, even though it's paid for you, that's not included in the calculation of the regular rate. Let's see. Perks, the overtime itself is not included in the calculation of that regular rate. Perks and conveniences for the employee. So gym memberships, gym access, fitness classes, wellness programs, those types of things, any of these other benefits that are provided that are not taxable to the employee, those are not included in the calculation of the regular rate. Profit sharing plan, stock options, and retirement and insurance plan contributions that are made on behalf of the employee. All right, discretionary bonuses are excluded from that regular rate as long as all of these criteria are met. Employer has the sole discretion to determine whether to pay the bonus or not. So it's not an earned bonus, but then it's not, if it's a discretionary bonus, it's not included in the calculation of that overtime rate. Employer can determine whether to pay the bonus, how much the bonus is, and the bonus payment is not made to according to any prior contract agreement or promise. Okay, so that would be a discretionary bonus, and that is also not included, where are we here, in our calculation of what the regular rate is, which we need in order to calculate the overtime rate. All right, so here are some steps for calculating overtime. You're gonna see here, and I'm gonna go through these a little bit more with the other slides, the ones for our textbook. There's a little bit of a different calculation for overtime here. This is called the overtime premium method. There are two methods of calculating overtime. They both result in the same result. You arrive at the same number. However, we have to use the overtime premium approach in certain circumstances when we have to, under certain types of payment plans. We've got to use that overtime premium approach, otherwise it doesn't calculate properly. So here are some steps for using that overtime premium approach. We take the total compensation, except for any of those exclusions, divided by the total number of hours worked in the work week to get our regular rate. Now, our total hours worked. So if we worked 48 hours, we're including those 8 hours of overtime in that calculation. Then we take our regular rate times 0.5 to get our half-time premium pay. So our premium overtime method. And then we add those two together. Or our premium pay rate times the overtime hours, and then we add that to the regular rate. So for example, unless they give us an example here in the next slide, I don't know if they do or not. Yes, they do. All right, so here is, and this one includes a bonus, a production bonus. So if it's a production bonus, that would mean it's a non-discretionary bonus, which means we get to include that in our calculation of overtime. Okay, because they knew how to attain that. So our hourly rate, $9 an hour, and then they got a bonus of $10. They worked 48 hours during the week. We've got to determine what our regular rate is in order to calculate how much to pay for those 8 hours of overtime. So what we would do, so we take the 48 hours, the total number of hours, 48, times the $9 an hour, 432. Then we're gonna add the $10 on top of that, okay? Then what we're gonna do, so we get to 442, then we're gonna divide that 442 by 48. It's got the light sensor. That 442 divided by the 48 hours, regular rate of pay is $9.21. Remember, we're doing this so that we can determine what our overtime rate is. We've got to get to that regular rate of pay. 921 times 0.5 is $4.61. That's our overtime premium. And then we're going to multiply that by our 8 hours to get $36.88 for overtime. And then we're going to add these two together. Now you might say, well, wait a minute. Why is it 0.5 rather than 1.5? Where's that other 1? We lost our 1 hour for payment of overtime, but we didn't because it's included up here. There's the 1, there's the 0.5. So we're still getting to the same spot, okay? Then we add those two together, the total compensation for the week, so they get $478.88. We do that because we've got to arrive at that regular rate. The fact that there's a production bonus in there means that it's complicated things a little bit for us, right? That means that our regular rate is different from what our just normal hourly rate is. If this individual did not have a production bonus, it would be a fairly easy calculation to do. We'll just take the $9 an hour times 40 hours, 9 times 1.5, to get to, and then multiply that by our 8 hours of overtime and then add those two together. That would be a fairly easy calculation, but what complicates it is that production bonus because we've got to include that now in our regular rate to determine then what our overtime rate is. Does that make sense? Okay. What do we have here? 15 minutes. I'm gonna save these for when we go, because on Tuesday or Thursday, we're gonna get a little bit more complicated. Remind me, I wanna go back to some of these examples for the different hourly rates. I know you have homework problems that include different hourly rates. We are gonna go through those over, how to do those. But for now, let's go back to this. Because what I wanna talk about at this point is exempt versus non-exempt. This is kind of easy to confuse with employee versus contractor. It's a different concept. These are both employees. Okay? We're talking about only employees at this point. But there are certain classifications of employees who, even though they work for a covered enterprise, for the FLSA, or they would be a covered individual, they are not covered by the overtime and minimum wage provisions of the FLSA. Now, they're very specific types of classifications. And I don't want you to feel too sorry for them, because these are generally individuals who are probably higher, not always, but they're generally speaking higher wage earners, okay? So exempt in this case means that they are exempt from those FLSA provisions. So they don't fall under the protections of the overtime, and it's only the overtime and minimum wage provisions, okay? They're usually considered to be, we call them like white collar workers for the most part, white collar, blue collar. It's not exclusive, that definition really doesn't fit all that well anymore, but the individuals who are exempt are executives, administrators, professionals, business owners, highly compensated employees, computer professionals, creative professionals, and outside salespeople. These are the general categories of individuals who do not have to be paid overtime for hours over 40 in a work week, and do not have to be paid an hourly minimum wage. There is a weekly minimum wage, though, that they have to be paid, and it's $684 a week. These are usually individuals who are paid a salary. Not always, they don't have to be paid a salary, but generally speaking, they're individuals who are paid a salary. And that salary has to be, or at least if they're paid on an hourly basis, again, their full pay for that work week has to be at least $684 for the work week. The only time that an exempt employee may be paid less than that $684 is if, like in their first week of work, they didn't work the full week, or their last week of work, they didn't work the full week. But all other weeks of their employment, whether they worked the full week or not, they have to be paid at least $684. Okay? Manual workers are always entitled to overtime pay, and these would include police officers, emergency medical technicians, firefighters, paramedics, licensed practical nurses. Of course, that's not an exclusive list. A lot of other people are also entitled to overtime. This exempt versus non-exempt, just like the independent contractor versus employee, this is not something that's determined by the employer. It's determined by the facts and circumstances of the employee's duties and what their duties entail. So, some definitions of those categories that I just listed. Executive, if their primary duty is managing others and supervises 2 or more employees, and they have the authority to hire, fire, or promote, they would be classified as an executive. And they could get paid $684 minimum a week. Now, generally speaking, people in those positions, because of supply and demand, are going to get paid more than that, right? But they do not have to be paid overtime for hours over 40 in a week, and they do not have to be paid the $7.25 an hour minimum wage. Administrative, their primary duty, make this a little bigger here. Well, maybe not. All right, so for administrative, their primary duty performs office work and regularly uses their discretion and independent judgment. Our bookkeeper could fall under that category, right? If they regularly use their discretion and independent judgment, they could fall under that administrative category. Professionals. The work requires advanced knowledge, science or learning. Knowledge is acquired by prolonged course of instruction. Think accountants, lawyers, doctors, those types of architects. They usually fall under that as well. Business owner. Business owners don't get anything unless they're making good money. A business owner would be someone who owns at least 20% of the equity in a company, and they actively manage the business operations. Otherwise, they're just an investor and they've got a whole different set of rules. They don't have to be paid anything. But a business owner, again, a business owner is going to be a little bit unique because that $684, of course, is going to be dependent on whether they're actually making enough money to pay themselves that, to get that out of there. It's a little bit different. Highly compensated individuals, obviously, if you're highly compensated, it doesn't even matter. Because you're going to be making that $684 a week anyway. You earn at least $107,432. Perform non-manual work. Regularly perform one of the exempt duties of an executive, professional, or administrative employee. This more counts toward the overtime provisions, not the minimum wage, because obviously they're going to meet the minimum wage provisions there. Computer professionals. They have a salary of at least $684 a week or $27.63 an hour. Their duties consist of system analysis techniques, design of computer systems or programs. Creative professionals. This requires invention, imagination, originality, or talent in an artistic or creative endeavor. It's pretty broad. Outside salespeople. Outside salespeople are people they don't have an office within the company, so they're always out selling, right? Primary duty, make sales or obtain orders for services or use of facilities regularly away from the employer's place of business, and there is no salary test for this. They actually don't have to make a minimum salary. All right, talk about that. Okay, we've got 5 minutes left. Let's go through real quick. Let's go through the child labor stuff and what's not covered, so that gets us. We already talked about that. That'll get us into the calculations for next time. So let's talk a little bit real quick about child labor restrictions. So these would apply to individuals under the age of 18. There's a distinction between farm and non-farm jobs. Non-farm occupations, employees age 16 and 17 can work an unlimited number of hours each week in non-hazardous jobs. 14 and 15-year-olds are limited to employment in retail, food service, and gasoline service. There are very specific conditions that must be met relating to the hours that they can work as well. Can't interfere with school. Agricultural occupations are a little different. Employment of children under age 12 is generally prohibited, but there's specific conditions or exceptions to that. You can be if your parents own the farm, that's a whole different story, right? You can work on the farm. Age 10 and 11 can work as hand harvest laborers outside school hours only between June 1st and October 15th. Think detasseling. I don't know if any of you have ever done that. If they're still doing it by hand, I don't know. Very strict regulations, obviously, because there are safety considerations. Employer has to have a certificate of age that shows that the minor has reached the stipulated minimum age, and there's some very serious penalties for those who are in violation of child labor regulations. I'm not going to talk about that. Just real quick, things the FLSA does not cover, and I've kind of touched on some of these. No extra pay for weekend or holiday work. Doesn't matter if it's Christmas and you have to work, unless you're in overtime, they don't have to pay you any extra for it. Don't have to pay you for severance, for vacation. There's no limit to the number of hours that they can make you work if you're 16 or over. They don't have to give you a holiday off. They don't have to give you vacation time. They don't have to give you sick leave. Now again, there could be state laws that do require those things, but not in Iowa. I know I'm kind of rushing through some of these. Maybe we'll talk about that just a little bit. We'll start maybe talking about that and then get into some calculations on Thursday. Okay, and then we'll get into record keeping, come on. Then computing, yay, finally, numbers. Get away from these words. All right, questions? You guys are very patient. We'll do some more calculations. I know your eyes all lit up when I started putting numbers on the board, so. All right, well, I'll let you go. Have a great afternoon. Start looking at the homework if you haven't already. I know it's not due until next Thursday, but it's a good way for you to at least, take a peek, see if there are any questions that may come up.
For the attendance for Thursday, that might be $8.
Oh, no, that's fine.
Okay.
Yeah. Right over there. Yep.